You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here on the old network one final time here for you on demand, folks, at least. Time for a little bit of the old vol talk. Yes, it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the aforementioned network upon which so many of you have been binging throughout the week. Hope you're having a good trading week out there. Things are looking green out there, even if they're not looking green on the screen right now. Hopefully looking green in your own portfolios out there. Of course, if you like what you hear, this show, anything else on the network, throw a like, a star, a comment, a rating, a review, whatever your platform lets you do out there. And of course, if you want more content in your lives, you don't want the party to end with Volatility Views here on Friday. You want to keep on going. You want to join me in a little bit with the Oracle of New Hampshire over there to break down some of the latest, greatest, unusual activity out there in the week and get into all sorts of trouble, which is always fun to wrap up the week on Friday. And then join us for Options Oddities. Only one place to go to get that, plus great pro Q&As. Just had Scott Nations in the hot seat last week, had Tony Saliba in there this week, so a lot of great folks coming in to tackle all your many and varied questions, including a lot of them on volatility. So if you're into vol, Pro Q&A hot seat is a fun one out there. Only one place to get it, theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn, see who's joining us on the old program today. Another guest who's joined us in the Pro Q&A hot seat very recently, also to talk a lot of vol. He is the greasiest of meatballs, Mr. Mark SEBASTIAN from optionpit.com. Mr. Meatball, welcome back to the show. How are things in the Southern Volatility Mecca of Austin, sir?
Oh, wonderful. I'm getting all amped up for RMC, getting amped up for today's trading day. Boy, I looked like a genius yesterday, and now not as much.
Yeah, the big three having a way of wiping some of the smiles off of the vol market out there. We'll get to all that fun in a little bit. I'm bummed I'm not gonna see you down there in Austin. I was looking forward to checking out all the goodness.
The heck?
Apparently, SIBO locking down RMC from all outside media out there, so I will be unable to attend, sir. So I'll look forward. Maybe you can be our boots on the ground guy. You could check it out for us.
Sure, maybe I'll do that.
That should be fun. We had you do that in the past. We sent you around the little recorder. We got kind of a meatball, meatball man on the street moment. Maybe we'll get some of that again. You want some of the vintage stylings of one Mark SEBASTIAN, listeners? Maybe we'll do that. It might be kind of fun. And now I'm intrigued. And I'm also intrigued.
Well, I'm on board.
I'm also intrigued. Speaking of fun vol events, we are joined this week by the once future and now present Dr. VIX. And he's all excited to come on. He's always excited to come on, but he's especially excited to come on this week because he is hot off of the other big vol show, the Global Volatility Summit that just went down this week in New York. And we'll be breaking all that down in a little bit on the show as well. Mr. RHOADS, welcome back to the program. Where are you beaming in from? You still in New York, or are you back in Chi-Town adjacent?
My professor office down at IU.
Oh, I was wrong on both fronts. You're down in IU.
Yeah, I had I came back from New York, dropped off some clothes, and then went south. And now I'm at IU. But heading home right after I'm done with this with you guys.
Traveling man.
I know, it's killing. I feel like I've been hit by a damn truck. So we'll see how interesting I get later in the program.
All right. Keep an eye on it, listeners, or perhaps an ear in this case, as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is trading and trending and what the unusual activity is. All sorts of fun going on in the world of vol this week. And, it seemed like we had a pattern. The Meatball alluded to it earlier. We had kind of a general trend for the week out there for the market and indeed for volatility. And that trend on the broad market front was mostly green, and the trend on the vol front was mostly red. And then coming into the end of the week this week, looks like the auto unions deciding maybe let's upset the apple cart a little bit. Let's bump that trend to the curb there, because now we are firmly in the red again from a overall underlying perspective. S&P off about exactly 1% right now, so nearly 50 handles below the 4,500 level that we were flirting around with yesterday. The Dow off about 0.75%. The NASDAQ off about 1.4%. So they are coming for a lot of names across the board. So apparently that whistling past the graveyard we were joking about yesterday on the option block, very short-lived out there in the market today. But that means, I guess depends which way you're leaning on the vol front. If you're like a lot of our listeners and the Meatball, and a little bit myself as well, you were leaning a little bit more dark side on vol coming into the end of the week. And instead, as the vol gods are wont to do, they are a capricious lot. They said, nope, not today. VIX coming into the start of the show right around a 13.5, listeners. That puts it down about a quarter of a point, actually, from where it was this time last week. Of course, we did dip lower. We opened today at 1270, so we had a 12 handle kicking, listeners, which you know my thoughts on the 12 handle. So we have since rallied from there. Will this remain the case? Looks like the sell-off is exacerbating a little bit out there. So if that remains the case, I'm not sure we're going to see vol ease up. If we tend to stop out to the downside, maybe reverse a little bit, then of course we will see that latter half heading into the weekend vol crash that we've all become accustomed to. Vol at about an 85 when we kicked off the show, down, literally unched from where it was this time last week. And then VOLQ, the NASDAQ vol, still down, but only down about 0.75 of a point right now, as NASDAQ just, they're lighting it all on fire out there. Mr. RHOADS, an intriguing week. We'll get to all the Global Vol Summit fun in a second. But first, sir, obviously a crazy week. We thought we had it in the bag. We thought we knew what was coming. And then wham, bam, thank you, ma'am. Here comes Friday. Here comes Vol Views. And a complete upending of the apple cart, sir. What's catching your eye out there this week and indeed today?
Well, I mean, today's price action is because I got out of my S&P short yesterday.
Oh, nice.
Yeah. But so here's what, and we always, it seems like every time I'm on, I get a call. Somebody asks, where I'm at with all of that. And I do share it over the weekend. Last weekend, I said, what I did was I got 50% long Russell 2000 relative to the S&P 500. So like if I was short $100,000 in S&P 500, I was long 50,000 in the right, which helped me a bit this week, but not enough. Whenever the year-to-date performance between the Russell 2000 and the S&P widens out about 10%, there's usually a good pair trade there. And I was starting to already feel I was already having reservations about and not feeling good about being short anymore. So now I'm neutral. Short S&P and long right. But the thing that caught my eye was, a 3.5-year low. in the the closing low in the VIX this week, which was a new 2023 closing low, which was the little signal that I said was going to get me out of my short. It sure got me out of my short.
Yeah, that's what you said on the show. Was it last week, 2 weeks ago? You said if it closes at a 12 handle, you're out, and you're
well,
mad
it was below 1291.
Yeah.
Or if we had 4 consecutive weeks of the NASDAQ outperforming the S&P 500. So there you go.
I didn't hear that second caveat. There we go. Okay, but I knew.
Okay. Yeah, there was. It's mainly VIX because we're on vol views, but there was another signal in there as well.
There you go, listeners. He's a man of his word, even if right now he's regretting it. But you know what? Live to fight another day, sir. That's what I always say. Let's go out to the Meatball, a man who's also full of regret today. Aren't we all out there today? Mr. Meatball, sir, what is causing your regret and your woe today, sir?
I mean, it's interesting that we had kind of all this flow come off the books today. This was maybe one of the biggest expirations ever, Mark, with quadruple witching. And that comes off the books and the market tanks. It's not, I didn't see a lot of news driven. And you say maybe it's the auto workers. GM is up, right? GM is up. What it's up 17. It's up 0.5% right now.
Is that the one that they said they were? Are they striking GM first?
They're striking GM. They're all three of them right now.
Oh, they're doing all three at the same time.
But they're.
I used to cover the auto industry. I'm sorry. I know I'm talking all over you, but I used to cover the auto industry, and I did it under somebody that had covered it for like 50 years, and he said that whichever one the UAW is the most aggressive with, that's the one that's actually the best of the three at that time, and people actually take that as a positive. So just. Yeah. It's counterintuitive, but he when I went through this before, he was dead right with that one.
There you go. A little bit of fascinating auto union insight from the once in future Dr. VIX. Don't expect that, sir. Always full.
I won't do that again, Marks. Promise.
No. That was fascinating.
All right,
and insightful.
I knew something.
But yeah, so it's interesting. Yeah, is there like news driving us, or is this just, hey, all this paper flow came off and now we can sell? We're still in range, right? The S&P has been in a relatively tight range since it got the big pop on August 29th. It has basically been hanging out in between 4,500 and 4,450 since the 29th of August, just kind of floating around the 50-day moving average. We get these big green bars, we get these big red bars, and then, we just kind of hang out. But kind of interesting, are we going to break? Watch to see if we break below the 21-day moving average, which is 44.51, and then at that point maybe we could get a real move lower, because like I said, a lot of paper came off the books this morning on quadruple witching.
Yeah, you're right. I was having some fun at the top of the show with the dire news out of the auto industry. Everyone's freaking out. The president's getting involved. All this Sturm and Drang out there. Ford's off a few cents, and the other two are up. So you're right. It is kind of funny. It's the old sell the rumor, buy the fact, apparently, out there, because they're liking themselves a little bit of this. But yeah, fascinating stuff out there on what is causing this. At the end of the day, listeners, more sellers than buyers, as all the old bitter guys in the SPX next to me used to tell me, and they were usually right. But who's always bitter, but always full of nuggets as well and insights, and also is our boots on the ground at a lot of these cool vol events all over the place, listeners, is the once and future Dr. VIX. He is hot off the plane from New York City for the Global Volatility Summit. We had the Flowmaster mention it a little bit on the option block yesterday, but I'm looking forward to a deep dive with you, Mr. RHOADS. Let's start with a little bit of an overview for some of our listeners who aren't familiar. What is the Global Volatility Summit, and who goes to this thing? This is not like a retail money show. What is this thing?
Definitely not a money show type of situation at all. In fact, I wouldn't have been able to go if it weren't for the academic discount. Dun, dun, dun. It's just amazing. I paid like a third of what, sell side professionals would have to pay to go to that thing. But it's one day. It's similar to RMC. But, RMC is purely SIBO products. So, of course, they're talking about a lot of other things as well. Because, VIX, if we did a shot every time somebody said VIX, we would have been plastered by the first coffee break at 10 a.m. So there is a whole lot of focus on VIX. But there's also a lot of talk about cross-asset volatility and those sorts of things. What I really like about something that I could not imagine not happening at a conference now is when they do those polls that we all get our phone out and and it's really fun to see, what your attitude is relative to other market participants. And I think there's I had 25 questions that I scribbled down, the ones that I found really interesting as quickly as possible. But the one that really got me going, and it's not volatility. There was a question, are bonds still the best diversifier for equities? Only 8% of people said that. Yeah, said yes.
I think last year really beat a lot of them.
Yeah, but that's happened before. It's happened 2 or 3 times in the last 100 years, and then everything goes back to normal. But also, and I'm not saying that I was running around saying this before the stock market started to fall apart, but I teach corporate finance, and one of the first things we teach is when interest rates go up, bond prices go down. Is anybody shocked that interest rates went up, in the face of inflation? And it's not like any of these hikes were surprise. We're watching the FedWatch tool. We're watching the other derivative odds that keep telling us, that this is not a surprise. And as we've gone through the tightening cycle, there really haven't been a whole lot of changes. Maybe they put one off once or whatever, but you really did. As much as people like to gripe about Powell, I do think he's very transparent, and he's not screwing around and trying to goose the market or anything. He's just telling you what he's going to do, and he keeps doing it. But why? Just bonds are supposed to be good diversifiers for equities, and historically they have. It didn't work this last cycle because the stock market sold off at the same time that we had much higher interest rates as well. And it wasn't the type of situation where the stock market is selling off and the Fed can cut rates because they're reacting not necessarily to the market, but what's going on in the overall economy. So if
I texted,
and with
I thought we were doing Stockholm,
the Treasury yield around 5% or so, I would have no problem whatsoever. In fact, I actually am thinking about buying a bond fund. And when I see only 8% of some really smart people saying that they're not going to use bonds anymore, and the majority said some other defensive strategies without being very specific. Only 16% said vol strategies, which I thought was kind of funny considering the group. But that's the one that really just kind of if 8% of people voted for it, there were probably only 5 of us in the room that voted for bonds still being the best diversifier. But just this one recent year thing should not change the long term the long term 60-40 portfolio diversification. It's blown up before. It's happened a couple of times historically, and then the next time the cycle acts just like it goes back to normal. So, I think it was an anomaly more than anything else. The majority of people think the U.S. is going to outperform all the other stock markets over the balance of this year. About 43%, the majority think that we've got a 20 to 40% chance of recession next year. Those were a couple of other forward-looking ones. This one's really funny. VIX is now, this will be the last question. VIX is near 3-year lows. What percentage of you think that the average for VIX over the next 12 months will be above 16 and below? What do you got? You always like to do this to me. I get to do it to you now.
How many voted above 16? That's interesting.
What percentage of the audience over the next 12 months thinks the average for VIX will be above 16 or below 16?
I'm going to say it might be pretty evenly split. I'm going to say like 45, 55, 45 above, 55
79, 21.
Really?
79% above, which is freaking hilarious when we hit a 3-year low 2 days after the conference.
They've been reading the SIBO marketing material about the long-term average is about 20, right? They've been They've been mainlining that. Wow. Okay. Interesting.
So yeah, but it was lots of smart people. I did get to see Henry. Saw some friends from some of the other exchanges I do stuff with, and just enjoy the one of the cool things that they do for the Global Volatility Summit is they have a different theme every year. This year was a circus theme, and they had a fireside chat with the guy that started Cirque du Soleil, which was pretty interesting as well. And you remember those boxes of animal crackers that you could steal at your grandparents' house? They gave those out.
I will say that Cirque du Soleil guy, no one has made more money from mimes than that man. That man is
none, and I think he's out of it. I think he sold it off, and I was just doing some other things.
Yeah, it is a corporate entity now. Yeah, so he has divested of his French Canadian street performers. What a thing to make a fortune off of.
Yep.
Any other interesting nuggets or takeaways from the Global Volatility Summit, sir?
Nothing. I'm looking through my notes. Nothing. Nah. There was one other thing. Oh, there was an interesting. There was a presentation where they were talking about how the MOVE index is so elevated relative to VIX. But which was really fascinating. But about 5 minutes into the presentation, they're like, the MOVE is really high relative to VIX, but there's really no way to trade it.
Yeah, that's what I was just going to say.
So yeah, it's great. It's going to come back in. We all know it's going to come back in. There's no way to profit from it.
Yeah,
I thought that was pretty cool.
You could trade it. You could do it in the bond market, I suppose. Right? You could do like an over the counter trade, but there's nothing listed on it, right?
No. And I mean, if you really wanted to, you could buy VIX and short some straddles on TLT or something like that. That might be a simple way to tap the equity market liquidity to play something like that. I have a whole lot of things I want to mess around with this weekend, and that's one. Let's try to figure out a way to do that.
People get all hyped about the MOVE index. It pops up a lot, but then you're right. Then the next question is, well, outside of some, obscure OTC way to do it, it's challenging for a lot of the people who hear that.
Yeah.
Oh, I want to trade on. Oh, wait, I cannot. So, yeah, that kind of cools the momentum for the MOVE index. But interesting stuff. Thank you, Mr. Boots on the Ground, once and future Dr. Mills. Let's go out now to the volatility surface, see what's cooking out there. And spoiler alert, it was down, at least when we kicked off the show, listeners. I'm sure if I reacted, it might be a little bit higher now, but we shall see. SEP, when we kicked off the show, so that front future down almost a full point, about 0.95 when we kicked off the show proper, listeners, and the OC future down about half a point. So a lot of evolution in that front portion of the curve, looking very fluid. Mr. Meatball, sir, what is catching your eye out there in the vol surface this week?
Yeah, it's amazing. Leading into today, the VIX had gotten the SEP future had gotten absolutely obliterated. I think we talked about it yesterday. And today you're seeing what can happen when you kind of oversell that front end of the curve. That's maybe why we're getting such a reaction. Vol had gotten pasted, and now it's starting to wake up a little bit.
That it is, Mr. Once and Future Dr. Vic. Same question for you, sir. What's catching your eye out there in the vol surface this week?
Not a whole ton. It just looks normal. And there was nothing that really stood out when I looked at it a little while ago. Let me look at it again. I wanted to look at the front month is still September expires next week. Yeah.
Yes.
I mean, it's kind of a decent premium, 40 cents, and kind of just going straight up as we go out into next year. A lot of people are, everybody was very bearish going into 2023. I think a lot of people are going to be bearish going into 2024 again. Doesn't mean they're going to be right, but I think you can see that in the surface already.
Just going to say it means we rally harder next year in the face of all this bearish sentiment out there.
I met Ed Thorpe once. I got to interview him. And when you know this as well as anybody, when you get to interview somebody like that and the microphone goes off, you try to ask them something, try to get some wisdom out of him. And I asked him what he was looking to, where are you looking at to make money in the market right now? And he just gave me this general answer. He said, I always look where other people are not looking. And that popped into my mind when only 8% of people think bonds are a good diversifier.
Who'd have thought bonds would be the place no one is looking? I thought maybe lean hog, something a little bit more esoteric, but no. Bonds. Bonds is the answer out there these days, listeners. Let's see what is the answer to the question we ask when we say, what's going on in VIX land today? And the answer is actually a whole heck of a lot, which is good because the ADV is starting to move in the wrong direction. In fact, today it is exactly 600,000 contracts, down another 54,000 contracts from this time last week. So again, it's like we're playing catch up for August now in September. These are the kind of numbers we expect last month, not now, but that's what we're getting. Seems like today we're going to maybe change that narrative a little bit because already 631,000 contracts on the tape, including another 100,000 just in the last few minutes. Something just went up. We'll have to go check out what's going on out there. In terms of size positions, though, in VIX land right now, listeners, what are the top 10 size open positions? If you're looking for a whole bunch of puts, once again, you shall be disappointed, listeners, because there is only one put to be found in the entirety of the top 10. I'm guessing you could probably guess what striker that is. But let's start at number 10. Cost you 219,000 contracts to break into the top 10 right now. So we're closing in on 15 million contracts open total in VIX land. So that is a heck of a lot of paper. So 219, that is pretty robust. That gets you to the SEP 35s. Number 9, 228,000 of the SEP 25s. Number 8, 237,000 of the SEP 20s. Number 7, 243,000 of the SEP 23s. Number 6, 245,000 of the first and only puts in our top 10 this week. You knew it. You love it. It is the SEP 15 put, 245,000 of those bad boys for number 6. Number 5, 252,000 of the SEP 24s. Number 4, 254,000 of my favorite, the NOV 47 halves. Number 3, 265,000 of the SEP 60s 6Os there. Number 2, 278,000 of the OC 20s. And the number one size position out there in VIX options right now, we've got 281,000 of the Ds 35s. So an intriguing position out there as well. I want to parse some of the paper that was going up this week because we actually had a fairly hefty week out there. But before we get there, Mr. Rhodes, when you're not busy flitting about from conference to conference, you're also doing a little thing we like to call Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Oh, yeah, listeners, one more time. You know it.
Now, Russell's Weekly Rundown.
It's... Whoa, what was that?
That was my Andrew impersonation.
Oh.
he has a very unique laugh that should be included at the end of that music.
He does find it enjoyable. So do I. I laugh every time as well. I also chuckle at your papers, sir. So what you got for us?
I just love that my daughter, 10 years old, says, I don't want to be associated with that. The first time I played it for him. I love that.
A woman of discerning taste.
Yeah. All right. Monday. No trades over 500 contracts in weeklies. I couldn't find anything. Tuesday, probably the only decent thing. And this looks like it was an opening transaction. Somebody sold 1,078 of the 15 calls and then sold 2,499 of the September 13th, 15 calls. They took in 6 cents for the 1,000 lot. They took in 7 cents for the 2,500 lot. It looks like they did this and just held on to it, and settlement was 14.05, so they were pretty good with that. Wednesday, things really did start to pick up a bit on Wednesday. Somebody traded 381 times. I love these odd numbers. Somebody traded the 15-20 September 27th bear put spread. They sold the 15 put for $1.05, and they bought the 20 put for $5.64. This was an opening trade. The net cost was $459, and the maximum profit is 61 cents. I don't like that trade. The index was at 1345 at the time, but yeah, I don't like that risk reward. If things go wrong, because if VIX pops above 15, it's probably going to 20 very quickly. So I don't think that there's any, I don't think there's a lot of wiggle room between those two strikes.
It does stand to reason, sir.
Yeah, so let's see. Also on Wednesday, 1,000 lot, my favorite trade. Kind of my favorite trade. Somebody sold the October 4th. A lot of October 4th action later in the week. Somebody sold 1,000 of the October 4th 14 puts. And they bought the October 4th 17.22 bull call spread. All of that netted out to a cost of 15 cents when the index was at 14.02. So they were, if the index didn't move at all, they'd be out 14 cents. Also, I think this one was a 5,000. No, the 5,000 lot was on Friday. Another few hundred contracts. The October 4th, 15.28 bear call spread. They sold the 15 call for $1.23, and they paid 11 cents for the 28 calls. The index was at 14.08 at the time. So looking good at that time with that one. Yesterday, we had somebody in like 8 lots by 963 of the September 27th 14 puts for 50 cents. 50 cent. The index was at 1316. So if the index was between 1316 and 1322 while this trade was going off, doing the quick math there, if the index doesn't move at all, the puts would be worth, that'd be about a 50% profit. The puts would be worth somewhere between 78 cents and 84 cents. And then today, that's where the 5,000 lot, the biggest trade of the week in the weeklies, somebody bought 5,000 of the October 4th, 28 calls for 9 cents. And I said 5,000 was the biggest. I lied. Also today, October 4th, options. Somebody bought 6,000 of the 16 calls for 74 cents, sold 6,000 of the 21 calls for 23 cents. Net cost was 51 cents. Is 50 cent being stealth?
There you go. He's back on both the puts and this. So there you go. He's double dipping this week on 50 cent. Someone's been reading your Substack on that bullish risk reversal, sir.
Good.
There you go. So they're liking themselves a little bit of the Mr. RHOADS bullish upside. Let's see what folks are liking out there in the big mothership VIX options this week, listeners, shall we? Today, like we said, a surprising amount of paper, including a little bit of spurt recently, about 100,000 contracts going up in the last 20 minutes or so. Right now, 631,000 contracts on the tape, so nothing to sneeze at out there in VIX land today. The big dog today, 66,000 of the Nove 21 calls, followed by number 2, 53,000 of the October 20s. Number 3, 37,000 of the October 24s. Number 4, 36,000 of the SEP 13 puts, the only puts on the docket today. And number 5, 28,000 of the DEES 19 calls. So paper kind of all over the place, which is interesting, and mostly to the upside, which is also interesting. Yesterday, a little bit more paper on the tape, though it seems like we're going to pass that today. 689,000 contracts on the tape yesterday. The big dog yesterday, 45,000 of the SEP 13 halves, the puts. So the meatball's favorite out there. Intriguing stuff. Maybe some folks unloading a boatload of those. Number 2, 33,000 of the OC 20s. Number 3, 30,000 of the DEES 20s. So a little bit of 20 strike action going up yesterday. Number 4, 27,000 of the DEES 19 calls. And rounding out the top 5 yesterday, 26,000 of the SEP 13 puts. Wednesday, the big dog day of the week, at least so far, 1.13 million contracts on the tape. So a big day Wednesday, including a lot of that, 165,000 of the SEP 13 puts and 153,000 of the SEP 15 puts. So a little bit of put action going up on Wednesday, dominating the tape there. Number 3, 75,000 of the March 47 halves. So it was just a beefy day all across the board, listeners. Number 4, 54,000 of the SEP 16s. And rounding out the top 5 on the most active day of the week, 44,000 of the SEP 14 puts. Tuesday, falling back off again, 418,000 contracts on the tape. The big dog, 29,000 of the SEP 18 calls. Number 2, 20,000, pretty much exactly, of the April 30s. The first size April I think we've seen going up in a while. Number 3, 15,000 of the OC 16 puts. Number 4, 14,000 of the October 20 calls. And rounding out the top 5 on a pretty light Tuesday, 14,000 as well of the OC 25s. It's like it might line up for a little bit of vertical action, maybe even financed by that 16 put. The numbers look fairly similar. And it does look like they sold put and bought the 20 call. So there, a little bit of your Mr. Once and Future Dr. VIX's bullish risk reversal approach. Intriguing. Monday, 449,000 on the tape. The big dog, 75,000 exactly. Not 75,001, not 74,999. Nope. It is 75,000 exactly of the March 47 halves. So once again, the 47 halves going up. Did they open them on Monday and close them on Wednesday? They did the exact same paper on Wednesday. I'll have to go look and see. That would be interesting. In and out of March in a couple of days. I'm guessing maybe they probably added to that, but I'll have to go look and see. Number 2, 42,000 of the SEP 16 calls. Number 3, 25,000 exactly of the March 29s. Now, that can't be a quinky dink, can it, listeners? Exact numbers going up. Lines up 1 by 3. Uh-oh, do we have the old 1 by 3 back for side? 29.47.5 in March. Those would be intriguing strikes. Number 4 here, 21,000 of the SEP 13 puts. And rounding out the top 5 on Monday, 16,000 of the SEP 18 calls. A lot to unpack here. Mr. Meatball, sir, an interesting week, an eventful week. Wednesday certainly putting up some numbers out there, including what looks like a size put spread there. We also had this, looks like funky return of the 1 by 3. What was catching your eye out there this week, sir?
Yeah, VIX was pretty active this week. It's pretty busy today, for obvious reasons. As it's popping pretty nicely today. Yesterday there was, I believe, some big calls. Today we've got just a ton of upside. They're buying the NOV 39 calls. You got some OCT 20s going up, the DEES 19s, NOV 21s. OCT 24s, the 20s, 24s, just tons and tons of volume here today on VIX. And we saw some pretty decent upside love leading into this week. As VIX was dying, people were finally saying, hey, people were finally saying, hey, maybe I'll go long some volatility here. And it seemed to work out.
And I just checked. Yes, they were doubling down on those 47 halves. They weren't closing them, listeners. They did 75,000 on Monday, and then 75,000 more on Wednesday. Mr. Meatball, you like those strikes for the 1 by 3? A 47 half, 29 in March, sir. Is that up your alley?
I mean, it's somewhat reasonable. We get a big pop. That thing is going to make some money. They're not buying the Kerbillion, which is nice.
I personally prefer the Kerbillion calls, but hey, to each their own out there. Mr. Rhodes, I know you're looking at a lot of the weekly paper. Anything catching your eye in the big VIX mothership this week, sir?
No, not really. Did you guys talk about the 180 call, the February 180 calls that they wrote up in Bloomberg last week?
No,
we did not have.
They wrote it up, and I don't like to pick on people, but the options were 5 cents by 9 cents, and they all traded at 6. And they basically wrote an article about how somebody was expecting VIX above 180. And I didn't know if you guys had kicked that one around or not.
She's a good reporter. She's relatively new to the business though, so she's still getting her feet wet. Yeah. So we'll take it easy on her.
I'm not picking on her. It's not I really am not ripping on her because it's. Looking at the volume, if you haven't been immersed in it like we have, it's not as intuitive to pick up on whether something was a buy or a sell. Yes. And really, I started to send her an email, and then I was like, I got too much other stuff going on. I'm not going to get involved in that. And I was just curious if maybe she had talked to somebody in the pit, or somebody had tipped her off that it was a buy, even though it was closer to the bid side. So, but yeah, like 8,000 of the February 180 calls traded last week. And that's just stupid.
That's why we don't talk about it.
I just don't know how to put it. It's just stupid.
I'm with you. I kind of wash my hands of that educating of new reporters because it's a lot of work.
It's stupid because if you get the spike next week, you're not going to make anything off of them.
No. Exactly.
The spike has to come between January expiration and February expiration, and it's got to go up to about 200.
Yeah, I used to spend a lot of time in the early days really trying to educate all the new reporters on the scene. I quickly realized they are legion, and they never stop coming. And it's just a full-time job in and of itself. And I thought someone else can do this. I have an actual business to run. So yeah, the new ones come and go. Gunjan's the weird kind of oddball. She's been doing that beat for a while, which is kind of interesting. Usually you're on that beat like 6 months, maybe a year tops, and then they move you on to something else like the stock desk. So intriguing stuff out there. Not as intriguing on those VIX 180s, but hey, you live and you learn in this business. Let's get out to the land of Mr. Rhodes' favorite product was looking. I think the technical term is redonkulous. Earlier, even today, setting yet another new 52-week high, new all-time high, 33.5. Oh, they got so close, Mr. Rhodes, we've been talking about for a while. A lot of our listeners had a lot of fun. Many months ago, he talked about somebody loading up on the SEP 35s in SVIX. And we thought, what an absurd trade. We had fun.
Why would you do such a thing?
Why would you do such a thing? And here we are on expiration day, sir. And they got oh so close. They sniffed it. 33.5. And now it seems like we're retreating back down to 32.16. Doesn't seem like we're going to get there today. That's almost worse. I think that's almost worse than, because they're still open. They're still riding these bad boys. So it's almost worse than if you never get there at all, because then at least you're like, okay, I didn't have much hope. But if you get this close, watch it hit like 36 next Tuesday, right? And then these people are just going to be weeping. It's been the size position, the size open position in SVIX for so long. We've been kind of secretly rooting for it now for the last month or so. And I thought it had a hard road to go, but it had a chance. Look at it, got there. It got way closer than I ever thought it did, and most of our listeners would as well. So yes, a little bit of a tip of the cap, maybe pour one out for all those SEP 35 folks. This far and no farther, sir. This close. So close, but so far, sir. What's catching your eye in your favorite product right now, Mr. SVIX, sir?
It's trading a little over 1 million shares today. That's kind of nice. So there's a positive. I just don't get why there's only $100 million in that fund. I don't either. It just, I understand. And I went to a different ETF conference in New York a few weeks ago, and someone got asked, why isn't money going into SVIX? And one of the panelists just said, trust. Nobody trusts the volatility after still with 2018 in the rearview mirror, even though it's a different product. But there's always a new generation of fear of missing out, chasing performance folks, and they did note that SVIX was up like 120% from their conference last year. And one of the other questions was what kind of strategy you think is going to work going forward. In the volatility market, the lowest answer was short vol, which I thought was kind of I don't know if it's because everybody sees all these potential potholes coming up on us or what, but people wanted people were really reluctant to be shorting vol. It's when you go to vol conferences, a good portion of what everybody's talking about is the volatility risk premium. I think I heard that phrase twice.
Interesting stuff out there. Also interesting that they haven't yet gone to replace these SEP 35s with any OX, done any rolls or anything, which is kind of interesting. I did look really quickly again to check. They put these up way back in March, and it looks like they may have overwritten some of these for 15 cents, in which case they are sweating right now, but a little bit happy that it worked out. So they would have been happy to let their SVIX go at a 35. Back when they put this on, SVIX was 1397. So a nice rally since then. But intriguing stuff. Mr. Meatball, anything lighten up your tape in the world of SVIX right now, sir?
It's not having a great day today, but it's been off to the races. New all-time high yesterday. I'm just kind of expecting to get called away in January from my trade. And if not, I may, if this thing gets back below 30, I may jump on board with some more of that overwrite. Back in business in the overwrite out there in good old SVIX. We're going to skip over its sibling UVIX because it seems like a lot of you are skipping over too. It's way below $3 and not looking like it's going to stop its downward spiral anytime soon. UVXY putting up some paper today, 113,000 contracts. That's worth noting because that's also exactly equal to the ADV, which is 113. So seems like it's going to surpass that today, even though that ADV has fallen another 21,000 contracts since last week. So vol products looking light this past week. Maybe today will change that. UVXY hanging out right now, right around 1345 or so, down almost 0.75 of a point from where it was this time last week. The big dog position out there, they're all pre-split adjusted for the most part, and mostly SEP. So that's good to see because those will roll off the board today, and then we'll get some new blood dominating the top paper out there in all things UVXY. Let's go on out to VXX. VXX was at about a 2030 when we kicked off the show. That puts it down about almost 0.75 of a point, about 0.7. It's now about 20.5, so that's down about half a point from where it was this time last week. So obviously, vol juice coming back in. It was hanging out in the 19 handle range earlier this morning. So VXX getting a lot of juice back. Let's see, it closed at 1991. So
It has popped a wee bit from those levels out there this morning. Of course, just in time for my put fly to look extra juicy out there in all things VXX. Let's go out to what we're looking at right now. The ADV, 74,000, kind of treading water, down about 1,000 from last week. But it seems like today we are going to bump that number today because 81,000 contracts on the tape out there in VXX today. Let's see what folks are up to out there. What are they slinging? The big dog today, 10,000 of the DEES 18 puts. Interesting. Let's see what they're up to out there. Looks like they bought 3,000 of them for $1.32, and they've gone on for prices around that level pretty much the rest of the day. A total of about 10,000 out there today. By the way, the big dog position in VXX right now, 27,000 of the SEP 20 puts. Now you might say, oh my God, here's another example of somebody that was looking good this morning. We were below 20. And then, of course, as is wont to happen with a lot of these vol products, they can be heartbreakers. And now we're rallying. We're about a half a point north of the 20 handle. Oh my God, these SEP 20 puts, they're going to go out worthless, this poor person. And then we went and looked just to see. And it looks like they opened the lion's share of these SEP 20 puts back on July 19th, but not perhaps in the way you thought. They actually looks like they were buying the SEP 22-20 put spread. It's like they did it somewhere around 15,000 times for prices around 92 cents. So this rally today is actually helping them because they bailed on the 22 puts earlier this week. Actually, about a week ago, it looks like, I think, for about $1.23. They dumped all those. So they bailed on the long put part. Then they were just riding the short puts. They were getting a little dangerous, a little close to the fire. They didn't want to buy those bad boys back yet. And that was looking like it was coming back to bite them until today. So this real pop today is actually probably music to their ears. Now, not everybody out there. Obviously, the rest of the OI is probably a lot of people who are sweating right now, thinking this thing was going to pop below 20 for expiration. But maybe not all bad news. I'm sure someone is probably out there. If they're smart, they're scrambling to take off the rest. Yeah, it looks like about almost 10,000 of the SEP 20 puts have gone up today. Yeah, so they got the hell out of Dodge on the rest of them. They got lucky, and they know it. Mr. Meatball, sir, what are your thoughts on your favorite VXX? You up to any fun, any mischief out there, sir?
You know, I was long some of the 20 puts into yesterday. I sold them, sold out of them, and I'm glad I did because they're now worthless. And I will be kind of playing with looking at October here if we get any juicier in VXX. I do like the I do love trading this thing though. Man, it's fun. The 20.5 calls for today, Mark, are 12 cents. Or you can buy the puts for 15 if you think we're going to rally back.
Buy them both.
What side do you want to do? If you like
one, why not buy both for twice the price?
Oh, yeah. That straddle sounds amazing.
That straddle sounds extra juicy. Yeah, but I'm lured back in. I put on a little put fly yesterday just for fun. After disavowing this product completely a year ago, I'm now dipping my toes back in, sir. So they have lured me back. I'm like Michael from The Godfather. Just when I thought I was out, they've pulled me back in just in time for it to pop, too, so it's perfect. But I can at least take off the downside of my put fly for some money there. That'll be nice. But intriguing stuff. Mr. RHOADS, what are your thoughts? Anything catching your eye out there in VXX? And how lucky did our friends here get? They were playing with fire, keeping the short leg of that put spread open, and they got lucky today, and they're getting the heck out of Dodge and thanking the vol gods.
Should be getting out of Dodge with that one. I just don't look at VXX like I that much. If I'm going to get long, I use the trade we talked about 5 times already today. Mark S., when you said getting called away in January, did you sell the January call? What calls did you sell against SVIX?
I bought SVIX for like $24 and sold the 30 calls at $3.50. And now I'm assuming I'm going to get called away.
Probably. You never know. So,
you never know.
Yeah. I sold those calls as well. That much lower. And I'm looking at my price. My cost basis is $4.30.
Oh, nice. Better price.
Yeah. So, and everybody was ugging about the short SPX not working. Remember, I always own SVIX. And actually, my trading account is up just slightly over the summer, and I basically was short all summer.
Well, there you go.
Thank God for diversification.
The magic of SVIX out there. There's also a little bit
short vol, short the market has been kind of an interesting trade because the short vol side has outperformed the market.
Oh, yeah.
Dutifully. And, you have to ask yourself whether that's coming to an end. Like I said, I think we'll know it by Monday whether we're getting kind of a second leg lower.
That we shall. We'll also know how our vol prognostications worked out, because it's time, listeners, for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Before we do that, really quickly, we have a fun question of the week that is coming to an end in a couple hours. So if you're listening on the podcast on the on-demand side, it shall be too late for you. That's why you got to follow us at Options throughout the week over there on Twitter, listeners. Mr. Rhodes, this was kind of inspired by a conversation you and I had on TWIFO last week about the potential for adding 0-day to energy options out there. They got the wheels turning about where else could we add 0-day. So that was our question of the week this week. We said, hey, 0-day, clearly popular with the index options crowd, but what's next? What other product or market or complex should list 0-day options next? Gave you 4 choices. We gave you, your equities, so your single names, your Apples, your Teslas, that kind of thing. Or your commodity front, so that could be the aforementioned energy, your nat gas or your WTI. Could be metals, could be maybe not ags, but who knows. Crypto, Bitcoin, or ETH, kind of the 2 standard bearers there, or the vol space, very relevant to this show, your VIXs, your VXXs, all that fun. Mr. Rhodes, sir, we were just talking about this. What is your vote, and what do you think our audience is voting for?
My answer isn't one of your choices.
Well, you have a write-in. Your choices are single name equities like Apples and Teslas, or commodity options, or crypto options, or vol options.
I proposed this one when I was back in my SIBO days. My answer would be equities on the heavily traded equities, but I would have earnings options. I wouldn't have dailies. I wouldn't have dailies on Apple, but when they're going to have a product announcement, or when they schedule their earnings announcement, have expirations that match up with the day that the stocks react to earnings. People would love that.
I think that would be huge. Yes, I think that would be great. So
before knowing what any of the potential answers were, when you read the question, I had my own answer, and that's why I kind of blanked out.
You're just writing in your own answer.
Yeah,
I reject your reality and substitute my own, says Dr.
That's right. I just do what I want.
You think our audience is going to equities or stocks as well?
Probably.
Okay, and Mr. Meatball, we talked about this yesterday. Are you still on the nothing should get it front, but our audience is going equities?
Yeah, no, there's no way. This would be dailies for, maybe you do cash settlement here, but dailies would be an absolute disaster in equities. You couldn't do it. Maybe you could do like the 5 stocks, but it would be a disaster. No. I mean, look at SPY, right? That's got dailies and it's a huge PETA. Q's kind of the same story. You're not going to see this in equities. The clearing firms would be a mess.
Send your party pooper hate mail to Mark at optionpit.com, listeners. Right now, our audience going heavy on the stocks, 43.2% saying they want single day Apple and Tesla, and they want it now, damn it. And then right behind it, 29.7% going for the vol space. So that's going to set Mr. Meatball's hair on fire. VIX or VXX dailies. They're coming next, Mr. Meatball. And then 18.9%. 18.9% for the commodities. So your energies, your ags. And then bringing up the rear, weirdly enough, crypto, 8.1%. So there you go, listeners. Do you agree with our party pooper in chief here, or do you agree with our audience? Hit us up. Let us know. Right now, we got the vol gods giving us all the smackdown. Let's see. Let's pull up right now. Right now, coming at the end of the show, I was at a 13.05 for this time last week, partly because I couldn't really bear to guess a 12 handle. And you know what? Didn't help me anyway. We're at about a 13.81 right now, up nearly a point now in VIX land. So we are popping hard, ladies and gentlemen. Mr. Meatball, 12.21. You were looking good until you weren't. No bueno there. Our resident upside friend, Mr. Overby, the options guy, he was going 15.01. He looks a lot better now than he did yesterday, that's for sure. Just going through some of our option guy, 13.95. You're getting close. 0.04 away. I don't know. If you make it by the end of the show, you might have a fabulous prize coming your way. We shall see. Our producers will go through the rest of them and see if there's any other close ones out there, because we're coming up against it, listeners. So we're going to do a twofer. First off, let's hit the old music. Then let's go out to the once and future Dr. VIX. What are you feeling for this time next week from a vol perspective? And then B, if folks want to check out more of your vol goodness, where should they go? What should they do?
I'll go with 13.25. We do have the FOMC next week, so I think maybe we trail off a little bit after that. Maybe I should go with a higher number, because it sure feels like there's something going on that none of us know about.
You are talking about in the chat about this hidden weekend.
So part of me, but
Dude, be the old Dr.
Whatever
VIX.
it is will only happen on Monday, and then we'll rebound. So I'm going to 13.25.
Do your old job. Do like 15, 16 handle the way you used to do back in the day. You know, always buying the upside.
No, I have to. I'm an independent contractor now. I've got to worry about my credibility.
And where should folks go if they want more Dr. VIX goodness in their lives?
My Substack. RHOADS.substack.com. Anything I ever write, I put out there on Twitter, and it's just at Russell Rhoads, my full name, RHOADS, not RHODES. That guy is a news anchor in Tampa, and I think he has a couple of DUIs or something. That's not me.
There is another Russell Rhoads out there lurking. Your doppelganger, a DUI Russell Rhoads. Interesting.
I've got a really good offline story about that. Remind me when we're done.
I look forward to it. And Mr. Meatball, sir, what is your vol prognostication? And then B, where should folks go if they want more Meatball? Maybe they want to send you some angry hate mail about your lack of love for Daily, sir. Yeah,
and have you guessed yet?
I have not. No, I'm going last.
All right. What did Russell say? I'm sorry. I was
13.25.
13.25?
Yeah.
All right. I got to tell you, we might get some teeth to this. But it probably, we might see 16 next week, but in the end, we're going to be marginally higher, 14.41.
14.41. We're definitely going to kiss. You're definitely going to kiss 16, because I got a VXX put fly in my back pocket, so we're definitely kissing 16. Why wouldn't we? Yes, a lot to. And where should folks go if they want more meatball in their lives?
Go to optionpit.com and check us out. I just did a write-up earlier in the week about how VIX was too cheap, and last night I was talking about that again. Vol got overdone, and we're paying the price. The VIX is paying the price for that today.
We're all paying the price, listeners. Remember, mark at optionpit.com to send him your hate mail about why you think dailies are the awesomest, most bestest, coolest thing in the history of time. Hit him up. Let him know your thoughts. Time for my thoughts, listeners, here. And we're hanging out. Yeah, there is that weird bit of what other shoe is waiting out there to drop. That does kind of linger in the back of the mind right now. You know me, I am just genetically disposed to not being able to guess a 12 handle, even if I wanted to. So I'm going to say I want to give some breathing room to Mr. Rhoads. I was thinking closer to his level, but I'm going to say, you know what? I'm going to kind of go a little bit north there. I'm going to say 13 double, 13.55. So there's your market for this week, listeners. 13 quarter for Mr. Rhoads, 13 double for your accurate prediction, and then 14.41 for Mr. Meatball next week. All right, that is going to do it for Vol Views today. For all of you on-demand folks, that will conclude your broadcast week with us. I thank you for joining us throughout the week. Remember, if you missed anything, it's all available there on the old feed. You can consume it at your leisure over the weekend, or for those of you listening many years from now, hope the future is great with flying cars and all that fun. For the rest of you hanging out in the live or listening on the Pro podcast feed, we'll be back in a little bit with the Oracle of New Hampshire, Mr. Matt Amberson, holding court over there on the old Options Oddities. That should be fun. We always get up to some mischief when he joins me on the show there. So that'll be fun. If you want to check that out for yourselves, only one place to go, theoptionsinsider.com/pro. And then, of course, we're back again on Monday for a little bit of the old OB, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.